Hi, I'm Tian.
Hi, I'm Skylar.
Today we are gonna introduce our data science capstone project, Gender Differences in Executives' Corporate Decisions in the COVID-19 Pandemic. This presentation would include introduction, related work, data, methodology, and discussion.
To start with, both of us have great interest in gender differences in decision making. For example, previous studies have found that males are more risk-taking than females, while females tend to be more resilient to pressure than males. These conclusions are mostly based on observations from lab experiments, but little is known about how gender influences real-world decisions under risk and stress, especially in a corporate context where executives are responsible for making most decisions. Specifically, the outbreak of the COVID-19 pandemic provides us with a unique context. Our research therefore aims to analyze how female and male executives respond to COVID-19 differently when they make corporate decisions.
Following these motivations, our literature review mainly focuses on three aspects. We first look at the COVID-19 as a major public health emergency. Researchers have already found that it causes a severe impact on global economy. China, for example, faced a decline of 6.8% in GDP in the first quarter of 2020 compared to the same period in 2019. The investment scales and total revenue of Chinese firms have significantly decreased, leading to a negative return rate. Similar evidence and conclusions are also found in Malaysia. However, as COVID-19 is a really up-to-date global issue, little work has already been looking into the effect of the pandemic on corporate decisions and how it interacts with the gender of executives, especially for American corporations. This further motivates our capstone research.
We then focus on gender differences in executives' corporate decisions. According to literature, female executives are found to be generally more risk-averse, which usually leads to distorted capital allocation. Other findings also include male executives being relatively overconfident when making significant corporate decisions, and having females on board is associated with more innovation. These conclusions all confirm the existence of gender differences in corporate decisions in various aspects. However, little research has been done to investigate these gender differences during the COVID, which is another main focus of our research.
Finally, as our capstone project targets at corporate decisions of risk-taking, cash holdings, and innovation, we mainly search around about what methods are commonly applied in recent studies to measure them. For risk-taking, there are three main measurements: leverage, volatility, in other words, the variances of returns on assets, and the likelihood of surviving over a 5-year period. However, after the first round of data collection, we found that our data access to survival-related information is quite limited. Therefore, we determined to apply leverage and volatility in our research. Cash holdings is actually a universal calculation method from both theories and empirical experiments analysis. And for innovation, researchers usually focus on innovation input, innovation output, and innovation quality as calculated below. Again, because of there is a great number of raw data missing in the databases, we eventually determined to focus on innovation input, measured by research and development only.
So now we are all clear about the measurement, and to be more specific, the variables we need to conduct our analysis. It's time to deal with the data. The data we need consists of two components, the executive characteristics and their corporate data. For executive characteristics, we refer to ExecuComp, a database including information about public companies' executives in the United States. We gather detailed information on each executive's first and last name, age, gender, and total compensation of all 2,186 corporations. The time period starts in 2016 and ends in 2021. Then after data collection, we first dropped observations that missed key information. The cost of the data amount was fine in terms of the total number. Then we did some calculations, including getting the total number of executives, averaging the age and total compensation, computing the percentage of female numbers in executives in each company every year. We also generated new variables like female dominance for further analysis.
Besides that, for corporate data, we refer to CompuStat, a market and corporate finance database on global companies. We acquired almost all data we need to compute the dependent variables mentioned above, except for the volatility. CompuStat only provides the variances computed monthly. However, based on our first round of regression results, we speculated that a daily basis variance of closing prices might make better sense. Therefore, we turned to CRSP to manually gather the stock data, which is a comprehensive database containing market and corporate action data for over 32,000 securities. We then computed the yearly variances and merged the sub-dataset with the main one using GVKey, representing different companies. For all rest-dependent and control variables, we computed following the formulas from the literature review, and then winsorized them in order to reduce the negative impact of outliers. After processing the data, we applied a method of panel ordinary least squares regression for analysis. We also added fixed effects of industries, years, and political affiliations into our models to isolate the systematic differences between these units. To address the issue of heteroscedasticity, we use clustered standard errors both at the year plus company level and year plus industry level. For all the regression tables that we are going to present, we'll have four columns, with the first two using whether there are female executives on board as the main independent variable, and the last two columns using the percentage of female executives. We also use both cluster standard errors with year plus company and year plus industry. In this sense, we conducted our four regressions for the four measurements.
Now let's look at the results regarding risk taking. So from the leverage perspective, we found that all companies significantly increased their use of leverage after COVID-19. And the positive coefficients of the term post-COVID times half female and post-COVID times percentage of female indicate that companies with more female executives on the board generally show a greater propensity to take financial risks when making corporate decisions after COVID-19. So from the volatility perspective, our results suggest that the volatility of stock market prices increased for all companies after COVID-19. And the interaction term turned out to be significantly negative when standard errors are clustered at the industry and year level. This means that the volatility for companies with more female executives tend to increase less. As for cash holdings, the negative coefficients of post-COVID and post-COVID times half female indicate that companies generally decrease their cash holdings after COVID-19. Moreover, the negative coefficients of the interaction terms suggest that companies with more female executives increase less in their cash holdings. Lastly, we found that all companies decreased their expenditures on research and development. And the positive coefficients of the interaction terms indicate that companies with more female executives decrease less in their expenditures on research and development. Together, our results generally suggest that female executives tend to take more risks and are less affected by COVID-19 when making corporate decisions. These patterns are contrary to previous studies showing that females tend to be more risk averse. Our research has several implications. First, for policy making, our results suggest that policymakers should take the composition of their target units into consideration when designing policies, as different groups may react differently to a certain policy. Second, from a management perspective, managers and leaders are also encouraged to apply probation periods to test how candidates respond to emergencies before making promotion decisions. Lastly, our research also has social implications. We found that females are not always more risk averse than males. Therefore, it is important that we avoid making pre assumptions about people based on their appearance, status, and etc.
Future work should focus on determining the underlying mechanism of why female executives are more risk-taking in the face of COVID-19 and conduct hypothesis testing to test the conjecture. Furthermore, if having access to more detailed data, future research could test the causal inference using methods such as difference indifference, regression discontinuity, etc. The summary statistics and part of our data visualization is provided here. And these are all for today's presentation. Thanks for listening.